Hey guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest, and today's video is all about SoFi Stock and, some other bits and bobs at the end. General stock market bits and bobs. First off, I'm not a financial advisor. This is just my opinions. SoFi is actually having a nice little climb at the moment. SoFi Technologies climbs 4% after Jefferies initiates a buy. So yeah, just in the pre-market trading, SoFi jumped 3.8% after the analyst from Jefferies called John Hecht. He initiated the neobank stock with a buy rating, calling it a flywheel of growth opportunity. And he actually went on to set a price target at $25. And that would imply a 65% upside potential. Not too shabby. And he predicted that SoFi's synergistic business model would continue to drive significant user growth, product adoption, and margin expansion. And I quote, SoFi boasts an exhaustive consumer finance product suite, a robust digital platform, and omni-channel execution. And he's definitely not alone with this positive sentiment. His ratings aligns with the average Wall Street rating of very bullish. SoFi has received 4 very bullish ratings from Wall Street, 1 bullish and 1 neutral. Something I'm seeing is that people are, trying to compare RobinHood with SoFi. The ticker for RobinHood is Hood. And, they're trying to decide which is a better investment. Personally, I don't think RobinHood's market cap can justify being 3 times SoFi. So is SoFi massively undervalued, or is RobinHood just overpriced? I think SoFi has a better future than Hood, especially when you take into consideration that the SEC is considering banning payment for order flow, which constitutes the largest portion of Hood revenue. It could be an idle threat, but it is a threat, and consumers, for the most part, don't like what Hood did by, all that stuff that went down in January, restricting trading in GameStop and AMC. That was pretty shady stuff. That kind of blackened their name a little bit. Also, I think the CEO of SoFi is much better, Noto, and the bank charter could just give it a significant boost. That's the cherry on the top, cherry on the cake. Ideally, go long on SoFi and maybe day trade or swing trade Hood. One could even go so far as to say it's not even a fair comparison, because they actually do very different things. I think SoFi does more things. SoFi, is really thinking ahead with the future and has constant innovation. And like I said, an elite CEO and high staff. If you look at the Google Trends for the term SoFi, it just hit all-time highs. Meaning the marketing strategy behind buying rights to the football stadium is definitely working. I think this company is about to explode. This is a quote from a good article over on Investor Place. A bet on SoFi stock is a bet on the idea that banks and brokers will be replaced by clouds and apps. That's a good bet. Banks are already becoming storefronts. Yeah, it's definitely true. You don't really go into the bank nowadays unless you absolutely have to, but I think there'll be a time soon when you don't really ever have to. Maybe just when you're opening an account. Maybe there's some people that will still like to go into the bank. Some people just love running errands. So yeah, all around, very good news. Still feeling bullish about it. What about you guys? Are you still feeling bullish? So yeah, I just mentioned the SEC, and there's another story I want to talk about regarding the SEC and Coinbase. Coinbase has announced that it is dropping plans to launch a hotly anticipated digital asset lending product called LEN. Very nice name, simple, I like it, but doesn't matter because it's not going ahead anymore. US security regulators had said they would sue if the product, considered to be beyond the scope of regulation, were to launch. The SEC always ruining people's fun, aren't they? Coinbase says hundreds of thousands of customers had signed up to LEN's waiting list. That's Coinbase taking a bit of an L right there. Next, I want to talk about Blackberry because they have earnings coming up. It's definitely been a crazy year for Blackberry. They had an absolutely amazing 281% jump in the share price in January. And okay, that may or may not have been solely due to Wall Street bets. Then the stock slumped to $7.94 on 13th of May, before eventually climbing to $10.03 by September 17th. The stock is still up 51.3% in the year to date so far, but Wall Street are not predicting good things for its upcoming Q2 earnings. In other news, Goldman Sachs is, going into Cathie Wood's turf, so to speak. And they have just launched a new fund called the Goldman Sachs Future Tech Leaders Equity ETF. What a name. And it's aimed at investing in technology companies with a market capitalization of less than $100 billion. The fund is targeted at diversifying investor portfolios from the large 5 tech companies that form a quarter of the S&P 500. The actively managed fund portfolio managers Sung Cho and Brooke Dane said that this was a strategy that Goldman has used outside the US. It currently has about $5 billion under management in similar funds. So that could be definitely an interesting ETF to look into. So guys, that's all for today. A bit of a quick one. Just, some nice little updates about SoFi and other news stories. Thanks so much for listening, guys, and I hope you're having a great day. Until next time, stay safe.